welcome everyone to another episode of Zebec's Future of Money. Today I have the honor of introducing Greg Leffel and Jessi Goostree. Greg is the executive director and founder of the Virginia Blockchain Council, and Jessi is the chief operating officer at the Texas Blockchain Council and the executive director of the North American Blockchain Association. Jessi, Greg, it's great to have you both on.
Awesome. Thanks for having us.
Yeah, excited about the conversation.
Absolutely. So today we're going to dive into a couple topics, questions around payments infrastructure and innovation, some around crypto adoption, and then we're going to end it off with just some regulation, policy, and some of the things you guys are working on at the state levels. And then maybe we'll touch upon what you guys are most looking forward to for the blockchain industry in the future. So let's get started. So Greg, from your perspective, how has blockchain started to reshape the traditional payments ecosystem, and where are we seeing the most meaningful adoption today?
It's an interesting question. And man, have we come a long way. I frame this, I think about it in two different aspects. One is stable coins. And then, of course, Block's most recent announcement, how they're going to help integrate 4 million businesses in the US and, in their footprint. So I find both of those super fascinating. If you go down the stable coin route, I think I just saw on the All In podcast, the most recent numbers that I had heard just blew my mind as it relates to Tether. And they have 500 million accounts growing at a 30 million clip per quarter. I mean, I actually had to go back and research that to see if those numbers were true. And certainly they are, or at least that's what, the research identifies. So I think that's just mind boggling. I think it's still a little slow days here in the US, but I think it's coming pretty fast.
No, I completely agree. And I think another reason why stablecoin adoption at least has taken off recently is there have been more applications to what we would call Web 2 financial rails. So I'll give you an example of one. So cross-border payments. We've now seen that instead of going to a Western Union or a MoneyGram, that people can now just send money in just through stablecoins. It's lower cost, it's extremely efficient, high speed, it's almost instantly in the recipient's wallet or however they choose to receive it. And I think that's one of the benefits of stablecoins. And I think that's why we're seeing a widespread application now of people using USDC, USDT, and all these other stablecoins that are coming out.
Yeah, I would agree.
Jessi, to you next. Stablecoins and tokenized payments are gaining ground like we just discussed. What are the biggest barriers that you see to scaling blockchain-based payments across states or even just nationally?
I think there's a lot of barriers, but there's a lot of momentum that we're seeing right now. And a lot of that has to do with the tailwinds that we're seeing in changes in regulation. And at NABA, we're working directly with state associations to reduce the fragmentation and promote best practices, especially around the stablecoin framework under the Genius Act. So the biggest barrier right now is inconsistency. At every state is learning in their own silo. And what we're trying to do is create knowledge sharing environment so states don't have to reinvent the wheel. And the best ideas that are coming from states like Texas, Virginia, and others rise to the top. So that when we partner closely with federal advocates to ensure states have clear guardrails when they're coming from these federal regulations like the Genius Act, they're getting the best possible information. And a great example of this is Pennsylvania last week, where NABA and the Blockchain Association hosted our first joint state-level Genius Act roundtable. And that's exactly the model for scaling safe, modern payment infrastructure nationally.
That's a good point. That's why we made regulatory clarity a top priority. We're actively pursuing MiCA compliance in Europe and FCA registration in the UK. And I think what we've seen in the US is the biggest barrier isn't technology. It's, like you said, the fragmented state-level compliance. The more states that work together on standardizing these definitions and licensing and these regulations, frankly, the easier it becomes for innovators in the blockchain space to offer compliant solutions. And I think that's the next step.
Yeah, I think we've been chasing, regulatory clarity for so long, and now it's going to be more about adoption. So tying together what the regulatory space is doing and then what Greg was saying with like this normalization of adoption.
I completely agree. And I think that goes right into our next topic, which is more around public, private, and government sectors and crypto adoption. So how would you assess the current state of public and private sector adoption of blockchain in your respective states? Are you seeing a shift from education to implementation?
I think that's an interesting question. If you look back and you were to ask me a year ago, conversations in Virginia were mostly educational in nature. I think this year and obviously going forward, the questions have changed now to like, what systems can we modernize and how do we integrate this to what we already run, across the Commonwealth of Virginia? So, I mean, that's so refreshing versus always playing defense and, what is blockchain and having these deer in headlights looks oftentimes when we sit in these offices. So we talk a lot about, guardrails and keeping innovation alive. So I think it's definitely changed. This year has been significant for us in Virginia. And then lastly, I'll just point out, we were able to stand up blockchain subcommittee through the hard work of folks like Alexander Mann and George Munden, who are all big contributors to our council. So that's been very exciting that now we have champions within our legislature.
And I'll just point out, in Texas, one of the big things that we're seeing, one of the clearest examples is the passing of the Texas Strategic Bitcoin Reserve. So a major state agency that oversees it, the Texas Comptroller's Office, is now learning the mechanisms of custody, liquidity, and long-term digital asset management because they have to implement this reserve. So when the world's seventh largest economy begins integrating Bitcoin into standard operating procedure, it's not education anymore, it's normalization. So I think that is a big example of seeing that shift from education into implementation into definitely Texas. I think we're also seeing it in the private sector adoption, accelerating in parallels, miners, data center operators, banks, wealth managers, energy companies integrating blockchain into daily operations as well.
Kudos to our friends in Texas. Great job on the SPR. I mean, it always takes somebody to get through, and you guys have done an amazing job. I will also just piggyback on that and say, I feel like the calls are a little bit more inbound versus always outbound. So meaning in the past, it was always us reaching out, trying to set up meetings. And now our governor's office is reaching out and legislators are reaching out to really get a firm grasp on blockchain.
Yeah, I would agree with that, Greg.
Alex, do you want to hop in?
Yeah, so just kind of piggybacking off of the payments and the infrastructure, the issue is the on-ramps and the off-ramps and in the background of the Clarity Act, and I think problematic clauses in the bill as it's written, and there's some misunderstanding in the industry. I think, having industry players get exposure to regulators and their staff is, a really big win. So organizing more demo days at the state and the federal level, like Jessi is a leader in the nation and kind of bringing together the state advocates and state representatives and kind of communicating these things and helping break it down. I think, for me, one of the biggest challenges that I've seen is educating in the space about the conflation between what the representatives hear from their constituents in terms of complaints of rug pulls or financial risk scenarios and compliance. But the other side of the coin, no pun intended, the blockchain is infrastructure, or like we're talking about here, blockchain is stablecoin payments and banking the unbanked, or helping to remove friction in the payment processes. Like the blockchain protocol works 24/7, 365, but one of the barriers is that the banking rails we rely on for on-ramps and off-ramps still sleep on weekends and holidays. So there's definitely some friction in the market, and I think, just getting out there and having these types of conversations really helps to thin the veil and make things a little bit more clear for our regulators and our legislators.
No, that's a great point. I like what you said about the difference between what blockchain allows you to do and what we've seen traditional Web 2 is. One is just the time. So like you said, traditional banking infrastructure is closed on weekends, holidays, etc. Blockchain is 24/7. And one of the applications that at least we've been working on and have been working on for the past couple of years is around payroll. So as you guys know, typically you have a 2-week pay cycle. You get paid the following week after your pay cycle is done. It's just a fairly inefficient way in the last 80 years to continue that same legacy system that an ADP had in like the 1940s or 50s into what we're in 2025. Like, it just seems like there's been a lack of innovation in the space on the Web 2 side. And what Web 3 has been able to do, and especially at Zebec, is be able to make payroll in real time. So now you don't have to worry about waiting for a weekend to pass before you get paid on a Monday. You can just get paid in real time despite holidays, time off, etc. And that's one of the biggest applications we've seen, at least for stablecoins and blockchain in general, just being able to transform the entire Web 2 and current banking structure And I think that's where the future of payments in the world lies. I think real-time payments is the next step.
And I think these are important concepts too for state governments to start to understand, especially for whether it be the state CFO or treasurer's offices in terms of remittance and licensing and tax payments and things like this, just saving both their constituents and the state in general money in terms of real-time payments. This is a concept that they're learning and they're starting to really appreciate as we're having these conversations.
No, absolutely. So you guys have both mentioned some of the work you guys have been doing on the Texas and Virginia blockchain councils. So you both have cultivated some pretty strong blockchain communities. What unique strengths or advantages do your states bring to the broader U.S. crypto landscape? And how can state-level blockchain councils like yours help bridge the gap between innovators and policymakers to ensure that the crypto and blockchain industry is more legitimate and responsible and forward-looking through legislation?
Sure. So, Texas, has, I would say, an unmatched energy infrastructure. I think for a long time, we've had real pro-innovative leadership and a culture of economic competition. And, state level associations like the TBC, like VBC and NABA really try to bridge that gap of translating that innovation into policy language. So we bring innovators and policymakers to the same table and show those real world use cases, and then help to design responsible frameworks that protect both the consumers while enabling growth. So I always like to say that when states lead, the federal conversations tend to follow. And that's what we're seeing with organizations like NABA. When states like Texas and Virginia start to do things, not only do other states take notice and want to build off of our frameworks, but also Washington takes notice too. So I think that it's not just our organizations, but the folks in the communities that are doing the work that then help to shape the policy, that then helps to shape the larger language across the country.
I absolutely agree with all that, except Virginia does not have great energy rates. We're certainly very jealous of that. It shows in our industry and what we're doing in Virginia. I would say this, when I think about the infrastructure and the power of the internet, that comes from Loudoun County, Northern Virginia. We've got a lot of really smart people. I would call them very Web 2-esque, but we have the brain power there, and I'm very excited. We sit right outside of DC, so we get to participate and include ourselves in some of those conversations, with federal agencies and regulate national finance. And I find those fascinating. It helps us stay part of that conversation. But at the end of the day, we're still trying to find our foothold in Virginia as it relates to what is our industry and how do we participate from a larger macro scale. So, it's exciting and a tad bit frustrating for us because, we don't have that energy infrastructure to say that Texas does. As far as bridging the gap, I really view our role in Virginia with our council, we're more of a convener or a resource at the end of the day. So we try to provide balanced, nonpartisan research and model legislation when we can to kind of keep some of the crazy, out of the conversation. We create opportunities for innovators to engage with policymakers. That's probably one of my favorite things we do. We love our happy hours in Virginia, but at the end of the day, it's more than that. We've got to figure out how to integrate, these roundtables, these legislative blockchain subcommittee briefings that we do, and demonstrations of real world use case and how it impacts the lives of Virginians. And I think you heard Jessi say that as well. So it's definitely an exciting time. I think it's only looking up, and it's nice to have tailwinds blowing us forward now, and it's a lot of fun.
That's great to hear. And I would say that from Zebec's perspective, councils like both of yours are extremely critical. You do help bridge the gap between builders and lawmakers, and innovators and builders can build all the next-gen financial infrastructure that they possibly can, but what they do really need are clear frameworks to operate in multiple states, and councils that facilitate those conversations like both of yours and push for these digital asset statutes. That's what makes the difference in accelerating responsible adoption for the entirety of the blockchain industry.
I love that. I would agree.
So we briefly touched a little bit on regulation, but what specific legislative or regulatory efforts are underway in Virginia or Texas to create clarity for digital asset businesses?
I'll take that one first. As I had mentioned, set up a blockchain subcommittee within our general legislature. That's been an exciting advancement for us as we meet on a regular basis to discuss opportunities as it relates to blockchain and how we can implement them throughout the Commonwealth of Virginia. So probably the hottest topics right now from a regulatory legislation perspective, I would say one would be DAOs. We've been working on DAOs, these decentralized autonomous organizations, for the last 3 years in Virginia. We got it across the finish line last year, and unfortunately our governor vetoed it, which was surprising, but we're cautiously optimistic moving forward into 2026. Then, the SBR with the likes of Texas leading the way. We're certainly trying to include that in the conversation. And then another hot topic for us is going to be these virtual kiosks in and around, i.e. these ATM type Bitcoin machines. So it's going to be interesting to see how all that plays out.
From a Texas perspective, so we have a unique legislative setup in that we meet every 2 years. So coming up in 26, we will not have a session, but we still have a lot to focus on, even though we will not be meeting. And we have 3 lanes really that I think, we are looking at, and that's implementing the strategic Bitcoin reserve. So even though it's law, it takes a long time to kind of set this up. We have $10 million allocated to it, but we need to establish the operational and custody standards for this. We want to make sure we set it up right. Everybody understands what's happening with it. And then secondly, we have our large load energy rulemaking for our miners under our Senate Bill 6. So we want to make sure that we continue to bring transparency and grid planning structure for our miners and our data center sector. There's a lot of people moving to Texas. There's a lot of planning that needs to happen for the amount of energy it's going to take to ensure that everybody has what they need. So there's ongoing conversations around that constantly. And then I would say thirdly, we are always focused on just regulatory clarity under our financial services, strengthening our consumer protection and creating predictable pathways for that piece of the industry. So I think that, both states really understand that clarity doesn't mean heavy-handed regulation. It means predictability for rules that attract high-quality businesses. It's always been Texas's motto of economic growth. We want businesses here. We want to make sure we're not stifling innovation. And that's going to be our focus in 26 and then going into our session in 27.
That's really promising to hear. So to wrap this up, you both have brought some interesting points and shared a lot about what both your councils have been working on. And you guys are pretty immersed in the blockchain industry as well as the political landscape in both your states and maybe even on a federal level. So if you could snap your fingers and implement one blockchain-related policy or reform tomorrow, what would it be and why?
Well, that's a good one. We can only pick one, is what you're saying. I mean, the one that we could get over the finish line and have enacted as legislation would be amazing. We have passed legislation in Virginia, by the way, kind of having fun with that question. But I think for us right now, you might have heard me allude to it a little bit earlier, is how do we help grow the industry in Virginia? And right now, I think for us, it would be passing DAO legislation, giving clear guidelines to the rest of the world that Virginia is a place to do business as it relates to the digital economy. It gives, guardrails and a way to interact with these organizations in statute. So I think that's super important. And I think it would help us continue to grow the industry, both locally and globally.
And I'd say if I had a snap your fingers reform, it would be to end the false narrative around digital assets. I think so much of our policy headwind comes from these misconceptions, and the narrative really keeps us from having an open conversations that we need to design real consumer protections, to unlock economic development, and then to widen, responsible retail adoption that we need to grow our industry. So if we could clear that fog, the policy work would move faster, better, and with more unity.
I couldn't agree more. Greg, Jessi, thank you both for joining and taking the time to share more about what your respective councils have been doing. It sounds like you have a lot on both of your plates, and we appreciate the work you guys have been doing to push forward legislation and regulation in the blockchain industry. It's a pleasure to have you guys on.
Thanks, Parth.
Thank you for having me. Appreciate it.
Absolutely.